get to the markets this morning, get some reaction to the inflation print today. Joining us this morning is Ed Yardeni, Yardeni Research President. Ed, great to see you again. Good morning.
Thank you.
I know you've written last few days about expected chop in September. You wrote about China last night. But I wonder, does this core CPI print, should it be considered a threat to the doves?
Well, I think to the extent that there was some heightened expectations that there would be a 50 basis point cut in the Fed funds rate next week, which would be sort of the ultra dovish position. I think that's off the table now, and I think you're more likely to see 25 basis points. I shouldn't say it's off the table. I really don't know what the thinking of the Fed is, other than that they've certainly pivoted away from being concerned about inflation to being more concerned about keeping the unemployment rate down. But the data today was pretty good. Take out rent, and the headline inflation rate was 1.2%. We've been talking about getting to this level for a few years. We thought that it would come down. So things are going right on inflation, and I think the surprise is going to be that the economy is more resilient than people are thinking.
If that's true, what did you make of the bank commentary yesterday, and did that move the conversation meaningfully?
Well, Carl, I only listened to what supported my story. The fellow from Bank of America, Brian Moynihan, certainly was very positive on that. Jamie Dimon's been kind of pessimistic about the outlook since May of 2022. He's been a long-time pessimist. But I think, look, you can't really generalize about the consumer. We clearly have consumers that are struggling, that maybe have maxed out on their credit cards. But then we also have plenty of other consumers, particularly the baby boomers. Let's say there's 70 million of them that have $78 trillion worth of assets. A lot of them are retiring, and that's why the savings rate's down. And they're spending money. There's no doubt about it. They don't have mortgages. They don't have to pay for college education. So I think it's a mixed story on the consumer. And when you kind of add it all together, it still looks pretty good. As you know, the Atlanta Fed estimate for consumption during the third quarter, real consumption, is 3.5%. That's gangbusters.
I'm thinking of all the big things you've written about, Ed, in recent quarters, namely the generational transfer of wealth, right, which you've talked about, the productivity progress we're making, and the export of deflation out of China. Shouldn't those all be considered positives for the U.S. economy?
Absolutely. I think the U.S. economy is the big winner here. You know, when the Fed started raising interest rates in 2022 through 2023, it was logical to believe that tightening of monetary policy would cause a recession. And the reality is there was a recession. It was just happened to be in China. They have a property depression, and they're exporting deflation. And that's one of the reasons that our CPI inflation rate has come down so rapidly, is because durable goods inflation, and we import a lot from China in that regard, that's come down into deflation again. So, yeah, absolutely. All those things are good for the economy and positive for the stock market.
Ed, did you read the Beige Book? I mean, more districts contracting. I mean, also, it does jibe with some of the recent commentary. I was looking at Dave & Buster's today, not necessarily that that's the most indicative of the economy, but tough kind of consumer environment. Many others are feeling the pressure. Petco CFO, choiceful and value. If you listen to companies and look at the anecdotes, it's full of weakness and softness on the labor market, on the consumer.
All true, and a very good point. It just seems that a lot of the survey sort of data has been more pessimistic than the actual data, and it's the actual data that matters. I mean, real GDP is running at 2.5% during the current quarter, and that's even with July being affected by the weather. And as I said before, the consumer is running, as the run rate is 3.5% in the third quarter. So I think that for some reason, the surveys are picking up a more pessimistic tone than the data is actually reflecting. Initial unemployment claims remain extremely low. You know, everybody kind of got bummed out by the payroll employment report for August, but actually the work week rose. And so aggregate hours worked is an all-time record high. And I think retail sales are going to surprise to the upside, as will personal income, because not only did we have more people working in aggregate in terms of hours, we also had a nice increase in wages. And to the point you made, Sarah, about real wages, they're absolutely up. And Lael Brainard was absolutely correct in saying that can only happen with productivity doing well.
We'll see what retail sales brings us, Ed. Interesting to get your forecast on that. Hopefully talk around that as well. Good to see you.